Hello, this is Megan Horniman, the Chief Investment Officer for Verdant's Capital Advisors. Coming to you today with our regular segment of Markets with Megan. We're going to talk about the markets today. The Federal Reserve had a much anticipated speech today. Jerome Powell made some comments that moved the markets, but we want to start with what initially started the move in the market, and that was a really weak Treasury auction. The 30-year Treasury bond was issued today. Really awful auction. We've had some weak auctions in the past, and it's resulted in interest rates moving higher. But this one was really bad. When you look at the yield that it came out, it was much higher than was anticipated. The bid to cover ratio, that was very low. So this is just a weak auction. It started a sell-off in the bond market. And then Federal Reserve Chairman Jerome Powell came back out. And what is surprising to me is that he didn't make any different comments than he did at the meeting on November 1st. Yet since November 1st, we've seen a pretty big rally in the equity markets thinking that the Fed was going to cut interest rates. They said they're not going to. They reiterated that. He reiterated that in his speech today, saying that they still have a long way to go with inflation, that rate hikes are not off the table. This has resulted in equities turning back around, pretty big sell-off in the equity market today, a pretty big sell-off in the bond market as well, with yields rising. Again, the Fed is being very transparent with what they're telling us. We've been warning investors about this for a while. The Fed is telling us that rate cuts are not on the horizon. Inflation is still their most important concern, and they will do whatever it is for inflation at the expense of economic growth. This is why we're cautious about growth. We still think a recession is unavoidable, and we think there still is time that we're going to see these tight monetary conditions filter into the economy. This is going to have an impact on economic growth. This is the only way we're going to be able to get inflation under control, and we've consistently told people that. So from an asset allocation perspective, we haven't been long interest rate exposure. We've been relatively close to the benchmark, and we've been warning and have been very cautious on those high PE growth type of sectors in the equity market. And we're seeing these sell off today as a result of these hawkish comments from the Federal Reserve Chairman. We'll be back with more details on the markets. And if you have any questions or comments, please feel free to reach out to podcast@verdants.com. Thank you.